The U.S. financial sector was positive in 2017, as most other sectors were in the marketplace. If we go back a little further and take a look at the performance for the U.S. financial sector using the ETF in the States XLF, we can see here that basically the performance was flat in 2015, coming into late 2016. We saw the rally based upon the U.S. election, flat again, and then it moved up from the summertime on to where it is now. If we take a look at the performance of the U.S. financial sector, once again using XLF, the ETF in the States, relative to the S&P 500, which is this black line. So when this black line is moving up, that means that the U.S. financial sector is outperforming the S&P 500. When it's going down, it means it's underperforming. And we plot that on the same line we had in the previous graph with the S&P, U.S. financial sector. It's by itself here. And we can see here that generally when the financials are positive, which is this line here, that the financial sectors outperform the S&P 500. And we can see that relationship has persisted over quite some time here. It's interesting, it's a small segment of time and it's difficult to extrapolate out forward from here, but it's something to watch out for. And that is in December, as the U.S. financial sector was moving up and was positive, the relative performance for the sector was going down coming into the new year. Recently we have seen a little bit of an uptick. It's hard to see on this graph, a little bit of an uptick on the relative performance, but it's something to watch out for. So on Friday, January the 12th, the U.S. banks start to release their earnings. We had Wells Fargo disappoint investors, and we had J.P. Morgan surprise to the upside. But what investors should be taking a look at right now is the reaction to the earnings coming out with the further banks, as if we see strong positive action taking place and we see the financials outperforming the market based upon this, that's actually a positive sign, because when the U.S. financial sector is one of the top performing sectors in the marketplace, very often it means that the rally can have some sustainable legs. If the markets underperform, if the financial sector is underperforming, it might mean some softness ahead. So watch the relative performance of the U.S. financials, particularly the U.S. banks. And if we see underperformance, look out for some softness. And if we see outperformance, that means that we might see some this rally being sustained a little bit further on. Thank you very much.